What's going on, everybody? This is Jordan with Conquer Trading and Investing. Happy Wednesday. What a beautiful morning to be with you all. You guys are all really a kind bunch. Like, you guys, like the positivity coming off you just radiates. And it's really, really beautiful. We got such an important session ahead of us. We need to take a look across all markets, the stock market. We need to take a look at the DXY potentially getting ready to break the neckline of an inverse head and shoulders, a big move possibly coming behind it, continuing. Gold and silver, are they getting bid right here, right now, as the yields 10-year coming off, breaking down outside the bear flag? S&P 500, Nasdaq, all new, all-time highs. What's going on? What should you be looking at? We're going to take a look across all the markets. We're going to do it today. By the way, if you're new here, welcome. And if you're not, welcome back. This is Jordan with Conquering the Markets, probably the best community there is online for many, many different reasons, but mostly because of all of you. That's what, look, what's next? That's the question, is what next? By the way, if you're watching this video before we even get going, before I can let you know what happens next, what we're looking at, what we need to watch, and how we need to think about positioning, please go ahead and smash the like button, whether you're watching this here live right now on the replay, or if you don't want to do that now, at any point during this presentation, if you feel like, you know what, I really learned something here, I value the time, I value the talent being shared, let me go ahead and just like destroy that like button and help this channel out. Appreciate that very much. It's you hitting the like button that actually brings other people in here like you. And that's how CTM like continues to thrive, and thrive it does. Absolutely astounding, amazing, the minds that have been brought together here in this community, all working together for that collective goal of just creating a better future. Beyond that, this morning the tweet was, right, most people, great morning, most people overestimate what they could accomplish in 2 years. For some people, that might even be what they overaccomplish what they could do in 1 year or 6 months. They have a really high time preference. They want things very quickly. But most people overestimate what they could do in 2, but they underestimate what they could accomplish in 10 years. And if you start thinking with that type of time horizon and get what needs to be in place first for the next 10 years, then you have the one strategy in place, and then you could work on deploying different strategies elsewhere with different types of time horizons. But most people do not set themselves up for success when everyone has the opportunity to make choices today that will do that. Right? Let's take a look at the markets. Do you remember it was just 2 weeks ago, everyone was looking for the markets to crash? No, I genuinely mean that. All over the Twitter, all over the YouTube, people are talking about a potential market crash and or correction. That was 2 weeks ago after the FOMC possibly talking about tightening one day in the future, right? And we were like, you know what, let's check in on the stock market. We need to know exactly what's going on at all times. This is a pretty important juncture. We pull up the charts and we say, you know what, we're coming into support. We don't see anything like the market crashing. The markets are not crashing. Let's wait and see what happens. If we get a breakdown, a technical breakdown, then we know that we're looking for a possible correction taking place. But we just don't have this. And then sure enough, the market has actually held support, which we did. You never know if it's going to hold support or if it's going to break support. All we knew that, hey, we had some pretty nice support. The markets are not crashing. And here we are. And then last week on the live training session, I told you all, I'm getting ready, to send out that stock market video that I want for everyone. And then I pulled up the chart here, the S&P 500, and explained we just broke the resistance over there, and we're looking to confirm that and support and make a next leg up, and what we would be targeting, right? Well, let's talk about it. Let's follow those who have a history of being correct on the right side of the market. Let's see how we see the market right now, why this is happening. Because if you look at the breadth of the market, you might say, hey, wait a second, for quite a while, since April, the breadth of the market looks pretty terrible. What does that mean? That means that you have a few different individual companies, providing the majority of the gains. Over 48% of all S&P 500 companies are trading below the 50-day moving average. I mean, it's not looking good. It's not looking healthy But why is this then happening? And why do the markets continue to print new all-time highs, right? Well, we were early on that. When I say we were early on that, we started, what are we looking? This is Giles's artwork here of the S&P 500, picking it up since I last left it off, right? That was after the election. After the election, we broke outside of this, breakout, retest, resumption, and that's kind of where I left it off. Here we are today, right? The only other time we've looked at this has been when the Nasdaq, the possible correction, what was it, March 17th, March 18th, on this channel, call out, I forget the dates, call out the possible correction on the S&P 500 and Nasdaq. And then we talked about, out of that correction, how to get reinvested on the repairs. Beautiful plays on the Nasdaq. And here we are now holding the trade when things got like potentially ready for a correction. But that didn't happen, and that's a big deal, being able to hold the trade and not let go of it too soon, right? Because a lot of people positioning themselves too quickly for something that's not happening. The markets are not crashing. Are they going to crash? Are they going to correct? Well, we're always looking for them to correct. We're not really looking for them to crash, right? Because if the markets start crashing, first of all, it's obvious as can be. Second of all, central banks is going to be right there really quick. We're not looking for the markets to crash. We're always aware of the possibility the markets could crash, that the system's very fragile. This fractional reserve dollar debt-based system is very fragile, and every once in a while it breaks, and the only way to fix it is to throw a bunch of money at it. And that's literally the only way to keep it going, right? So we're looking long term at the S&P 500, and then wait, I remember we were very early because it was all the way back after the Fed expanded their balance sheet, but by $4.1 trillion, that we got on signal and we said, you know what? This is uber asset inflationary. Uber is the words we used, and we were very clear about it. And we had the discussion with other people. You have to triangulate your thoughts. So the Steve Van Metro or something like that. He's appeared on Real Vision wearing that paper Burger King hat, and he's like deflation, deflation, deflation. And we tried to have the conversation. No, this is uber asset inflationary. Don't sell stocks. Stocks go up. But and some people worried about some type of insolvency event. Like this was the potential insolvency event, but when you throw that much money at it, right? Stanley Druckenmiller, sure, he got on the right side of the trade too. He was like, listen, I have to follow the liquidity. Has that changed, or is that changing? That's the question. If you can't see right now, or buy now, I should say, that's fair. Wow, 277 likes. We must got 500-600 people. 770 people here live. Let's go ahead and smash the like button, whether you're watching this on the replay, watching this live right now, or just joining us. I guess, in retrospect now, everyone is able to see, well, that was correct. QE is uber asset inflationary. Stocks and assets are following the central bank's balance sheet. Okay, we missed it here. That's fine, right? Over here, we still wanted our case to be correct. Okay, but we saw it happening a little, and now it's very obvious, but we still want our situation to be correct, right? It's very obvious now, but what's next? That's the question. So let's take a look at it. This is looking at the S&P 500 versus the Fed's balance sheet. All right, so you can see it's not that the S&P 500 is rising. Remember in 2008? I remember the crisis. It was one of my best performing years ever. The only other one that was better was last year, both during crises, excelling under that type of atmosphere, but understanding those type of a crash, that this time it played out like 2 months, less than 2 months, 45 days, right? Can you imagine? The last time that I had lived through that had been 12 years earlier in 2008. The markets are not crashing. Both years, my best performance by a long shot, being able to take advantage of that situation. But what do you do in between when the markets are not crashing? What's happening? How do you get yourself positioned? And more importantly, why are you getting yourself positioned like that? Here you're looking at the S&P 500 versus the Fed's balance sheet. It hasn't gone anywhere. It's not that the S&P 500 is going up. Go back to 2008. Let's get a different even view of that. Since 2008, Is it the stock market's going up, or that the dollar's purchasing power is being diluted? You know, that's what's happening, is the dollar's purchasing power is being, is being diluted. It's being devalued away, and it's not stopping, and it's not going to stop, right? But it is going to accelerate. It is going to accelerate. People talk about the inflation being transitory, and that this is all deflationary. We're aware of the massive deflationary pressures in the world, namely technology, right? But we're also aware that you can't just print money out of thin air, monetize the debt, and keep doing that forever either. That was called MMT. And then when you heard about it, you thought that's crazy. It's happening now, and it's accelerating, right? This is a chart of, and I pulled this up for you at the beginning of the year as well. Nothing has changed. Everything is the same. We're looking at a chart since the system broke in 2008, right? And you're looking as equities go up. Are equities going up? Well, no, they're just tracking the balance sheet of the Fed, actually, right? It's not that they're going up in value. They're maintaining purchasing power better than the dollar, but that's about it. So we've talked about these pullbacks that you see along the way, and most of the pullbacks are quite shallow, averaging about 8-9%. You have absolutely some bigger ones, like the one that occurred during the crisis. If I could pull, I'm not going to be able to pull it up, and I'm not sure what it was. I could figure it out really quick. I would like to know. I'm sure you would like to know as well. Yeah, 33% but we were we were shorting that, like, beyond bazooka that whole way down, because we saw it unraveling. We saw it happening. And then after the Fed responded, shortly thereafter, we were able to get our bearings. After selling, it's very difficult to sell something down, for 30, 40, 60 days and sell it hard and actually make more points than you've made in the prior 12 years, like in days, and then flip, to the other side. That to be able to flip on a dime, when new information is presented, is what it's all about. But has any new information been presented between then and now? And it was 2 weeks ago, we saw, the Fed say, all right, well, we're no longer not going to talk about tightening. We're willing to have the conversation now. So, people will say, okay, well, maybe the Fed's tightening. Yeah, well, they're saying maybe in 2 years from now they might tighten. They might ease before. Did you see that China eased again today? China reversed course, easing. Oh, I have a beautiful chart. Let me see if I could find it. I think it's this one over here. This is the U.S. money supply. You see that rising, but we talk about global liquidity, right? We know the ECB, by the way, is almost on pace with the New York Fed. They're $1.4 trillion yearly in QE purchases out of the New York Fed. What is it, 1.2, 1.3 out of the ECB yearly? I'm not exactly sure on that number, but it's close to that. And look at China, and I believe this morning the headline is as China returns to easing. I believe they lowered interest rate on some type of funding. I don't know the detail. I'm not concerned with the details, right? But this is the detail that I'm concerned with. Everyone's expanding their money supply, and the rate continues to increase. They learned from 2008. In 2008, when we expanded us alone, the U.S., when they expanded their monetary supply by, $700 billion, $800 billion, that was a huge number, right? And then, how many years went by? 11 years went by, and then finally they were ready to tighten, and they started, quantitative tightening, taking money out of the system, and it broke the market. It literally broke the market. We started seeing problems in the repo market September 2019, and then by February, it was supposed to stop by the end of the year in December. January they had to increase it. February they had to increase it. The system was broken. There weren't enough dollars, and then all of a sudden we had a crash, and then we had the response was to add more money. So they learned that they can't take away that money or they're going to break their system, but they have to keep giving more money at accelerating rate. So what do you want to be invested in and why? Right? We're looking here. This is from Lynn Alden. She's saying the Fed's balance sheet, you probably saw this already, has now crossed $8 trillion. It's a milestone. And it's on pace by the end of the year for $8.5 trillion, assuming they start slowing down a little in QE. Actually, the monthly QE purchases for quite a while over the past several months have been more than they should be. Why is that? Why? No one's for a lack of money. People are speculating on all sorts of things, including Dogecoin. All right, let's keep going. This is right. This is the New York Fed, the Federal Reserve, right? And what they're saying, I can't believe they have that many followers. We continue to adjust repos as needed to foster an efficient and effective blah 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 blah. And Lynn's like, Buzz Aldrin, we're going to the moon, or Buzz Lightyear, That's what that translation. We're going to the moon, right? So you have to understand what's happening here. When Amazon went from $2,000 to $3,000 in 2020, a year ago, it's not, why did it go up? Was it because it was gaining market share from all the small businesses going at it? Had already been doing that and crushing that, including those that sell on Amazon, right? They have a history of finding out, because they have the internal analytics, how to make the product cheaper, sell it better, and then advertise it above the other. It's brutal, right? But what did happen was that the Fed expanded their balance sheet. We created 40% of all new dollars in existence in 2020. Chew on that for a second. And that's why the price in dollars went up. It's not as if those purchasing power of those dollars increased. So what I'm getting at, and here's by the way, gold versus the S&P 500. And this is basically flatlined too, especially since 2008. It hasn't gone anywhere. It's had spikes up and down, and that could, and unless gold is repriced, I really don't see a major move happening in gold. You all know that, though. I've been pretty clear and consistent about that. S&P 500 long term, bringing back the focus. WTI, right? You remember when oil went to zero? Do you remember on this channel, 2020? Oil was trading at like $65. Call out the price target of $35, and then that unfolded rather quickly, bringing it down to 22, or 20. And then as we're approaching 22 very rapidly, okay, 14.50, and that's where we stopped because I didn't expect oil to go to zero, right? Fed's response, though, what's happening to all assets, oil now trading at $73, and it looks bullish, right? Assets go up, following the global liquidity, and it's all type of assets. Here's the housing market. People right now are looking for a crash in the housing market. They think that it's gotten away from itself a little too far too soon. And that could very well be the truth. But what type of correction, when we see a correction, will we see? And how long will it last? I don't know. I ask myself these questions all the time. I ask myself, you see certain portions of the housing market, the demand is absolutely crazy. Other portions of the housing market, it's changing. People are starting to cut prices. I don't know what happens next, but I know I do not want to be invested in the housing market. I know that very much well. High inflation is always transitory. And by the way, we're looking to sell our own real estate. We are looking to sell right now. Can't find a buyer though. That's the whole thing. Can't find a buyer for certain markets, right? Certain markets, they're coming in and they're like, you can't even get an inspection here. They won't let you have it. If you want to buy the house, you have to buy it as is. If there's any issues, you're going to have to deal with it yourself. And they could do that. It's not right, but they could do that because the demand is such that, if you don't, someone else is going to, right? But other types of other ends of the housing market are a little different. And it's actually tough to find buyers. And is it really worth that price if there's no buyer at that price? High inflation is always transitory and always ends in recessions or depressions. Well, this is like, the reason this is in bold letters over here and on the screen is because it's so important. It's just so important. Why are we talking about high inflation? The Fed is saying that we're not having any type of inflation. Well, let's bring it back over here. This is the cost of living from 1976. And you all know a new house cost $43,000. The average income was $16,000. The problem now, you see income has risen from back in, but it's plateaued for quite a while right now, where you're not seeing the average income rise. You're seeing high net worth individuals, their income rise drastically, but people, earning wage, their incomes are actually staying flat as the price around them of everything else goes up. It's stagflation, or what they call it. I call it dishonest and disingenuous, and stealing from people and giving it to other people. New car back then, $4,500. Average rent, $220. College tuition, oh my gosh, $3,700. A movie ticket, $2. If you don't see the inflation, right, and you call that like the world we've been living in deflationary, I I think you're missing the point, or the picture, right? But we have some things changing right now because high inflation. This is the concern. This is the worry. It's not happening right now, but we're seeing more and more signs of it potentially happening and getting out of control. The thing is that like it happens like this. It happens like this. So if you're not on the right side of that from the beginning, you're just going to wind up losing. And most people are going to wind up losing. And we talk about being on the right side often. Yeah, those that own stocks, they're protected. They're protected. That's a good way to put it. And listen, it's not that we can't have a crash. It's possible that the markets crash. Right now, they look so healthy, it's ridiculous, right? Right now, I'll come back to looking at the TA in a minute as I finish this little bit of the presentation we're looking at right now, right? We'll come back and we'll look at the TA. What I want to talk about right now, though, is how inflation, it's what was the whole point of this, Jordan? Why do you have this big bolded over here, right? It's looking like the inflation is not transitory. It's looking like when people keep repeating something like that to you, there's a reason. It's because they want you to believe it. But if you look around you, you see inflation right now rising drastically. Is it true that that could end with some type of depression, including like the housing market and real estate getting obliterated? Yes, that could very well happen. Are we close to that happening right now? It doesn't look like it whatsoever. Right now, what looks like happening is that the future pace of the central bank's balance sheet worldwide continue to be increasing. The liquidity is going up. It's been follow the liquidity since the beginning. There's no reason to stop doing that at this point, right? We are seeing some major changes at this point. And what do I mean by that? As I mean that today we have the release of the FOMC meeting minutes. It's all of a sudden very important what the Fed is communicating and what the Fed is doing. Why? Because for the longest time since the crash, right, since they intervened, the message has been like, we are going to stay super accommodative. We're not doing anything. We're not even having a talk about doing anything. And then we had the talk 2 weeks ago about doing something one day. And people got worried. But they didn't do anything, right? We didn't have any type of taper tantrum either. The support held. That's the most important. And on the Nasdaq, the support that we called out held, right? So what happened? What's happening now? Well, now the market's realizing, wait, we have super easy monetary conditions. We have to follow the money, and the market continues to follow the money. That could change at any given time. But right now, if you look at the S&P 500, breaking outside the trend line, the channel that we were in, the channel we were watching, after breaking above it, retesting it and resuming off, flipping the broken resistance and support, that's where you're picking up more S&Ps because you have a while to the upside, right? You have no resistance up into this area at first. We've been resistant since 2009, right? This is a trend line that you're going to watch and pay attention to around, now all of a sudden we're talking like above 4,400, right? That's all in play right now. What is that? Is it another 3%? It's, another 2.9%. Is that the risk? Well, right now it seems like the risk is to the upside. These 2 weeks of July happen to be historically very bullish times of the year for the stock market. Whether or not that repeats itself, more often than not, it does. We don't know what happens this time. That's not a way to make an investment decision, but something to be aware of. We always want to be aware of the seasonals, especially those out there that keep looking to for the stock market to correct, right? So the question is, well, when does it correct? 1 or 2%, giving me a better entry. Well, right now you still have this line to keep tracking, right? Any test of that broken resistance should now continue to be support. And those are good places to look for entries if we come back down and wind up testing it. And if you keep going up, okay, then look, going forward, this is where we're watching. We're watching on the first breakout, the retest, and the resumption, conquering the markets all day long. And if I miss this one, there's no big deal. There's going to be a million others. The market's always going to be there, and there's always opportunity. I mean, the Nasdaq over here, it's got even more room to the upside. It has potentially like another 6-7% to the upside. 5.5% right now to the upside. If it takes a while to unfold, it's going to be even higher, right? By the end of the summer, you're talking 6-7%. That's a lot of room to the upside. Now, what about the downside? Well, we have our levels and they're very clear. It continues to be this trend line that we were watching that held just a couple of weeks ago. And then, you also have this green trend line over here, and breaking back below that would be a sign that the Nasdaq is cooling off and could be coming for a correction. And if you're waiting and if you have the patience, there's eventually going to be a correction. And it's a better at this point. What was the entry on the Nasdaq? The entry on the Nasdaq, was it off the support? I think for me, it was very clearly the last two entries on their Nasdaq were coming out of the corrections. And this when we talked them through, when we went day by day on the live streams, pointing out how that worked in real time. And I think this was just a matter of holding on to the trade. It was just a matter of after the FOMC, and you're still pushing that trade, not looking for new entries. You got to wait for the next correction. You have to understand what's happening and why stock market continues to go up, right? But you have to we only looked at this a couple of times throughout the year, and those were the times to take entries, right? And then the other time we really looked at it when it was the time to protect yourself. And that's what we did. We kept everyone on the right side of the trade at the right time. Things could be changing. We're watching the dollar here, right? Watching the dollar. Do I have anything else? Yeah. Before I move on, talk about the dollar. I want to talk about the 10-year. I want to talk about gold and silver. All right. What's the price of Bitcoin right now? Bitcoin up 1.5%. Bitcoin is ready for a big move. It's ready for a big move, up or down. Nobody knows, but we could really see and how that's going to unfold and why it's going to unfold so soon. So we'll end looking at that. But we're seeing people talk about this elevated risk of persistent inflation. Raul did a poll on Twitter last night, and it was just asking people what their political biases are, how they consider their political beliefs, and then whether or not they believe that we're looking at deflation and or inflation. And it was interesting, so listen, always check your own bias, always check your own bias and understand things that just, understand as much as you can about whatever position you're in, and that makes looking at it from all angles. If you're afraid of any type of echo chamber, then number one, you're really afraid of having the ability to think critically. You should feel confident in your ability to think critically, right? So understand one side for whatever case you believe, and then also look and understand the other. And that's only going to help one of two things. Either you see things clearly and get on the right side, or for you to firm up your own belief. All right, but we're seeing people, we have, first it was Larry Summer, the former Fed chair. He's looking right now, he's the former Clinton Treasury Secretary. Excuse me. He was not part of the Federal Reserve. He was the U.S. Treasury Secretary. It gets confusing these days because it's like, today, Janet Yellen is the U.S. Treasury Secretary, but yesterday she was the Fed chair. Wait, they're separate but the same, And then now he's Harvard president, Larry Summers, the president of Harvard. Interesting. He's saying that what he's looking at, he really sees that these inflationary pressures are, there's a high risk that they could become persistent, not transitory. And it's not just him. It was Ray Dalio saying the same thing. Who else are we looking at? These things, I prepared this for you 2 weeks ago. I prepared this for you as we were breaking out right over here. Or not even almost 2 weeks ago. as we were breaking out on top of this channel, I prepared this for you because it was the right time, but it's not the right time here, right? We have, I do a best every single day. That's for sure. But I have the wife and the kids. You got to make sure everything here is in order and spending as much time possible with them. So I didn't have the opportunity. So, I forgot what I actually prepared 2 weeks ago and why this was here. But if I highlight it in blue, it's probably pretty important. So let's read it, right? We have a strong economy and why inflation may ultimately prove to be transitory. It's possible, right, that inflation could be transitory, right? There's a material risk of it being enduring, that it keeps lasting, that it's persistent. And that happens to be, the bias that I have. I don't know what's going to happen. I'm open to both, but I'm really worried that we're going to see persistent inflation, right? We have Janet Yellen, now Treasury Secretary, saying that she believes very much that it's going to be transitory. Like she's a proponent of, she's the mouthpiece that like it's going to be transitory. Jerome Powell's going to be transitory, and they could very well be right, right? Those guys are the masters, the central banksters, and maybe they're right. But Janet Yellen also told me that in my lifetime, in her lifetime and my lifetime, there'll never be another crisis. She said that. And, I didn't believe her then. And I don't believe her now. You have to follow those who have a history of being correct, and in this case, she didn't and I did, because when she said it, that there'll never be another crisis in your lifetime. I was like, that's absolutely hogwash. There's no way that's going to happen. All right. This brings us back to Bitcoin, as always, as we look at what the future is, or what follow the money. Keep it simple, follow the money, right? We're looking at whether the inflation is transitory or not, or whether it's temporary and over the next year you actually see it level off and only a little bit of inflation here and there, and things start to actually maybe even just level, sooner than later, we're going to see another spike up. That's my belief. But either which way, we know that the Fed's balance sheet is only going to do one thing, to continue to increase. And it's not just the Fed, it's worldwide. Follow the global liquidity. Your purchasing power is being devalued. Where are you going to invest? You could invest in the stock market, right? And that's going to protect to a certain degree your purchasing power. Something interesting is that the historical return has been 7-8%, right? Of the S&P 500. It now looks like that's rising. It now looks, and this is something Michael Saylor talks about. Last year the dollar devalued by 37%. Last year they increased the monetary supply by X amount. How much are they increasing it by this year? And how much do you expect the dollar to devalue this year, right? But the DXY itself, the dollar versus other currencies, is potentially breaking out right over here right now. We're getting very close to it, right? So the dollar versus its purchasing power is one thing. What the dollar is going to be doing versus other fiat is another. And you can see right now we're coming right into this trend line, right? And a break above it, that's going to send us long here on the DXY. It's a very clear signal, and it's a big signal. And we're getting there right now. Look at that. We're coming right into that resistance. Now the resistance, right? We expect it's going to hold until price breaks through it, right? Price breaks through it. That's the alert. This is changing. Looking then for the entry. The entry is going to be some type of retest and resumption out of it, right? Look at the 10-year major breakdown. This changes is it possible when it comes to yields, we start seeing these deflationary pressures take foot right now? Absolutely. We just had a technical breakdown. Now here's the wild card is the FOMC. Let me get on the daily time frame for you. You can see the daily close below this downward sloping channel, this bull flag, and more importantly, falling outside this trend line over here. This is a shift on yields. The last time there was a shift in the direction of yields, that was going back down to April 2020. Now all of a sudden we had a technical breakdown, right? So there's a difference between being like, I'm on the wrong side. I'm on the wrong side, but I think I'm right. I'm on the wrong side. I'm on the wrong side, but I think I'm right. And then like you're right, and there's a difference between being like, this is the right side. Okay, now I got to get back on. Now I got to get on the right side again. And that's what I'm doing here, following the technical break. And yes, we could be seeing some deflationary pressures when it comes to yields taking foot right now, or we have the FOMC meeting minutes today, and the market may say, oh, wait a second, they're not even really serious about talking about tapering anytime soon. Wait a second, we're on the wrong side. And then if we get a fakie over here and we wind up trading back within this channel, right? At that point, it'll take me back neutral. Back above this trend line, at that point, I'm just neutral, right? And I'll be waiting until the break of this trend line over here to the upside to then flip that position to the other side. So that's a big deal today, right? This is when it deserves the attention when it broke down. And if we see yields breaking down, what does that mean for gold and silver? Well, should be really bullish here for the metals if we continue to see those yields fall, right? This could be a period right now. If today the meeting minutes are like, you know what, we're serious about tapering, we have a plan, we feel comfortable and safe about doing it, then we might see gold and the dollar both rising strongly. Yeah, don't get caught up in the correlation between the gold and dollar and think that they trade inversely to each other. What that means for Bitcoin, I have no idea. Bitcoin's going to do Bitcoin things. But we could see, especially with the dollar breaking out over there, we could very well potentially see gold and the dollar both doing well and it being a really good environment for them, including silver, right? Whether silver outperforms or not, I don't know, right? Just follow what's happening on the charts. We'll follow what's happening technically. But the thing to watch out for, though, is the meeting minutes today, how the market reacts, and then we have to continue watching going through the August and Jackson Hole. We're going to be watching that trend line, right? Right now, expecting further pressure here on the yields, unless we break back above this into this channel, then we're just turning neutral and have to get back above this. You could have a rejection of this trend line at any time until the price breaks back above it. This broken support should now be resistance. So Bitcoin, it's been, let me jump to the 2 hour. And this is all we need to see is that we continue to be trading between the line of hope, right? The line of hope and this peculiar trend line that once price breaks above or below, we should see a big move, a really big move. Now that move, could be into the resistance over here at 4,000. We could get a break of this range over here, haven't really been above $41,000, $42,000 since the middle of May. A breakout of this could send us to test that area and potentially even break it. Probably first move into it, probably a rejection. What trend lines over here do we have? We have in this area right now around 39,600. You can see the horizontal resistance at the same time, right above that, getting closer to 4,100. On the downside, we could come, realistically and test, as low as into the 25, I'll call it 25,500 area. Those would be big time buy spots coming down into this area of channel support. Not that we haven't broken. This was a lot of volatility going on. This was capitulation, right? But the trend line is still in place. And after the capitulation, after the large volatility, you could see this level really being firmed up with 3 touches to it, right? That's the expected. I would imagine anything could happen, right? It could go lower. Bitcoin could go to 0. Understand and know your risks, right? We're not getting into that today, but watch out. And now, if we break down, it doesn't mean that we're going down as far as 25,500 or testing anything like that or anything like that, right? We could test again the $30,000 area. We got trend line support in that area, of course, horizontal support. That area could very well hold between 29,000 and 29,000 and 30,000. I imagine there's a lot of buyers down there. Now, a lot of people, if this breaks out to the upside over here, I'm not talking about continuing the momentum and the next leg up and breaking the most important trend line in crypto, right? I'm just talking about breaking outside this little triangle, right? If that happens, there's going to be a lot of people who are going to be wishing they could have bought in this area over here when price was trading around that $30,000. We'll see it right now. And now there's many people here who are highly cautious and they don't know what's happening next, and they're just really staying defensive and they're just waiting and staying patient, right? And then you have myself, right, with over the last couple of weeks, not this week, the prior 2 weeks, I bought the dip, not even trying to time it. I'm just buying the dip here. I believe 50% drawdown from the all-time high mid-cycle. Beautiful opportunity. I understand my risks. I know we could go lower, but to me, is the risk to the upside? Well, it's going to be there soon. It's going to be there soon. It's only a matter of time, in my mind, before we break, the most important trend line in crypto. And when we do, the momentum should really begin picking up and kicking up. So, 48 minutes, 545 likes on 1,000 people. Thanks for being here. That's a lot of likes. Thanks for being here. Thanks for spending the time together. This is Summer Crew strong over here in CTM, right? It's the summer, yet we're still so strong, and that's awesome. You gotta. I heard Greg say this morning in the Discord. He's like, listen, you just need to be the best. You have to try and just be the best you that you could be. And that's all. And that's hard, and that takes effort, but it's so important not to be too hard on yourself, right? To understand that you are human, that you are flawed, right? That you're going to make mistakes. Don't be too hard on yourself. Love your neighbor as you love yourself. You have to love yourself. You can't love, if you don't love yourself, you can't love your neighbor, right? Love your neighbor as you love yourself, which also means that you have to be kind with yourself. You have to be patient with yourself. You have to be understanding with yourself. You have to be merciful with yourself, right? As thy neighbor. All right, everyone. Good session. Good session. Thanks for being here. I'm going to play some Honeymoon vocals, because it's that kind of vibe. And then we'll say goodbye. Wow. Even still, that was the perfect clip. But even still, a couple of questions wasn't clear, right? Am I looking to sell our house, going to rent, or see? We have an investment property, I suppose you could say. Owned real estate better, but we rent elsewhere. And we're looking to sell that property. Why? For many reasons. I don't want to hold real estate at this particular moment. Now, do I think that real estate goes up? I I do. I really genuinely do. I feel that it's going to run a lot hotter for a lot longer before the inevitable crash. And what that crash looks like will depend on a lot of things. It'll depend on a lot of things. But listen, it's not easy to sell. Again, it's not, depending on what market you're in. It's not easy to sell. What else do we have to say? There was one other thing that I thought I wanted to. Yeah, Michael, welcome. It's good that you're here. I'm so glad that you're here with us. And if you're listening now and you haven't yet subscribed, and you're out there, go ahead and subscribe to this channel. You can see that this is the most important trend line in crypto. And once that breaks, this is conquering the markets all day long. It's how we play out of corrections. Now, that's worked out a few different ways. We talked about the first repair. If I go to my document, showing our overall thesis, it gives the date of the video where we talked about that first repair and the first, whether or not this holds or we make a lower low, we have no idea. But the risk to reward is absolutely here right now. Once that happens, breaking outside of this one, at that point, again, it doesn't mean that the low is in, but the probability of that happening increases drastically. And it's a good risk to reward. At that point on the break, momentum should be picking up, and it should be only a matter of time before we're testing that all-time high at $64,500 on Bitcoin, getting ready to continue to new all-time highs. That's my opinion. That's the way I see things. Again, you do want to follow those who have a history of being correct and on the right side. I honestly, there were a couple out there who called the bottom when I did in December 18. I don't know anyone else who called this move over here in January, but there's no question I did. The break. I never thought we broke down this trend line right here on Bitcoin had we not had the crisis. But we had the crisis, the dollar liquidity crisis. We had the model break, this anomaly, and we were here to lean in and make sure that we were all positioned ahead of not only the halvening, because you have this line over here, May 11th, 2020, that's the halvening. But we were looking for the breakout of the bull market, right? It was the breakout of this trend line here from the last all-time high, setting off our position over here and getting ready for this. That's what's been happening. What do we expect that our original presentation and thesis is going to play out correct? Yeah, there's no reason to believe that anything has changed. The only thing that has changed is time has proven us to be, like that close to being on the heartbeat. So everyone, have a beautiful day. I'll see you all tomorrow. Tomorrow we got Thursday, and then we have Thursday FX training session. Someone had a question on the pound, US dollar. We'll give it a close look tomorrow. Tomorrow is going to be nice also because we have the potential breakout of the DXY here, right? Or rejection, right? And if we get rejected, by the way, into the resist, we're watching this line over here, right? As long as this line holds over here, the potential for the rejection, then, it remains in place. Breaking down outside of over here, and then we go heavily neutral again back into no man's land. All right? So, again, this is dependent on the Fed. The dollar could bust through here if we talk about like a big taper coming soon. And if they don't, or if for some reason the mean in minutes prove that they barely spoke about it or something, then we could see this resistance provide resistance. We could see this line break, right? That's where we're at right now. Good session, everyone. Lots of love. I'll talk to you tomorrow.